Monday's market closes mostly higher except for feeder cattle futures. Joining us to visit about that, Ted Seifert, Zener Ag Hedge. And a higher day except for feeders, as I mentioned, as it was kind of a risk-on day. Weather was part of that, wasn't it?
Yeah, weather was part of it. And when we get these risk on days, we're able to trade more of the fundamentals of the individual markets. When we have the risk off days or the inflation off days or, oh boy, global recession days, and everything's just selling off, they really don't respect any individual market fundamentals or technicals or anything like that. But on days like this, we do. And that's great. We talk about weather again. We have some concerning forecasts going forward, a lot of heat. Although this has become a bit more of a soybean thing than it is for corn. You can see that with corn kind of lagging behind both the soybeans and wheat today. But yeah, we're talking about weather, and weather is concerning. We didn't plant enough soybean acreage for the balance sheet, in my opinion. If we continue to look at some threatening forecasts out in August, I think there's a really exciting soybean story that could be had here. It really actually could be the tightest soybean balance sheet that we will have seen throughout this entire 2.5 year rally or so. It really is a lot of explosive upside potential for beans if we do need to price ration based on some sort of supply issue. But you really do want to see these markets get back and up and over the 200-day moving averages. That's very key to say that we are that was an overall correction rather than a transition to a bear market. We might be able to do that as long as this risk off selling and inflation off selling doesn't come back into the market in the next few days.
Right, and crude oil being higher, the dollar index lower certainly helped part of that risk-off environment. I guess the big question is, you kind of hint at it, but are the funds going to participate in this rally? They have gotten rid of a lot of their lengths, so are they going to help us, and how far can we push this thing if they do?
Yeah, and that's the key, Michelle. Which way do the funds want to go with this? And I don't know if that's going to be based on what they think about corn or what they think about soybeans, for example. I think that's more their macroeconomics, and that seems to be shifting on a daily basis. So it'll be really interesting to see how we follow up the strength that we had to start the week and if we're able to continue to capitalize on it. And I'm not just talking about the grains. Really, crude oil is sort of the canary in the coal mine there. If they continue to buy crude oil, um, I think everything is going to get the benefit of that. Certainly the grains from an energy perspective. But if they're buying crude oil, that means, in my book, they're buying commodities as a whole. And the crude chart actually had the best looking chart on Monday. So maybe that is suggesting that they will continue to buy. Uh, but again, it's so hard trying to predict an inflationary bubble versus a recession. These guys are really very flighty in one day, out the next. It's just, you got to wake up and look at the price action every day, and that's going to give you the best idea of what to do. Sometimes technicals aren't really mattering in these markets. Fundamentals, for the most part, seem to be somewhat by the wayside for most days. So, yeah, the price action is really the biggest driving factor that you have for making decisions right now.
So what are you watching technically? You said the 200-day moving average. So where does that come in on corn and beans?
Yeah, so for corn, that's at 420 or just under, I'm sorry,
620.
just under 620, right? So it's like 619 and three quarters. So a solid close above 620 gets us above that 200-day moving average again. The 200-day moving average is important because that's our long-term trend line. When we're trading below it, we're saying we've transitioned to a bear market territory. When we're above it, and we can hold above it, that suggests that we've had our correction, and now we're getting back to the bull trend. So these are the deciding points that corn has right now. And it's the same thing for soybeans. Soybeans for the November contract, that's 1380, right on the nose. So we've gotten some sort of, well, it seems like we want to go test that out. Now, whether we're able to get up and over it and stay over it is another really big question. At least for this one day, corn was not able to do that. Hopefully, that's not a telling factor of things to come for soybeans as well.
So what about the wheat market? The dollar did pull back, but we had a horrible week last week, taking out more war premium with ideas we were going to get more Ukrainian exports flowing. What do you think they're going forward? Are we going to be able to recover in this market? Were we putting some war premium back in, or what was it today?
Yeah, Michelle, I mean, we've got wheat almost $5 off the highs. We've taken away all of the war premium to this point, and we've taken away all of the weather premium to this point. I don't think all of that was justified. Markets have this tendency to overrun the mark, right? To the upside, to the downside on corrections. We don't stop right where we should, right? That's part of price discovery. I think we've overrun to the downside there in wheat. I think we are due for a bit more of a correction. I think that's part of the reason why we were able to hold on to the strength that we had there on Monday because we're so far down off those highs that we're just really very oversold and again due for a technical, at least an attempt at a bounce. So we'll see. But again, it really kind of has to do with what happens with row crops, what happens with commodities as a whole. And again, the thing that we're talking about as far as, what's the overall investing climate? Are we risk on, risk off, inflation on, inflation off, global recession, or everything's fine? That's going to really kind of dictate what all these markets are going to be doing going forward. But I like the look of the wheat chart. I would like to see more of an extended bounce to the upside in an absence of this crushing risk off, inflation off. Oh boy, here comes a recession market. If we're not getting them, I think wheat is looking for more upside potential.
Cattle market split, feeders down with the higher corn, but you also had live cattle up on Monday. We had a higher weekly close last week. Do you think that market can continue to push higher here? Because it feels like we've really done well in this recessionary environment.
Yeah, that's the really nice thing about cattle is that beef demand's really kind of been there. We've seen higher prices. We worry that, okay, that's going to start killing off demand, but for the most part, it's been there. The other concern is, what happens if crude oil prices start coming back like they did on Monday? Well, okay, so we worry a little bit about demand there. And then you had, stocks which had been higher most of the day on Monday, ending up, heading towards negative. They were about midday and looking like they were going to be weak into the close. So you had two reasons to kind of question that live cattle demand. It wasn't a great day for live cattle. On a chart, we got up and over some very key resistance levels, but then by the end of the day, by the time we got into the close, we had given back a lot of those gains. We did stay positive on the day, but it could have been a much better day there for live cattle. And again, feeder cattle really kind of holding it back. And like we talked about, higher crude oil, lower stocks. That's not the combination you want to see. I'm optimistic because, again, I do think domestic demand is going to stay really rather strong. I would like to see some export demand come back into the market rather than the marketing near lows. But, for the most part, I think demand is going to be fairly good, and I think we have upside potential. But hogs, I think, are the more interesting trade right now, and apparently so do your speculators.
Yeah, let's talk about that. Funds adding to their length on the Commitment of Traders report. We did get above some pretty good chart objectives here now, haven't we?
Yeah, we really have. This is a breakout to the upside in the funds, and you do have your technical traders, your funds that just look for these sorts of things that they're going to be interested in buying. But I also get the feeling that there's a lot of investors looking at the fundamentals of hogs and feeling like, hey, this is sort of our recession-proof bet that if we do have a real big global economic slowdown, people are going to still want to have protein, but they're going to be looking for cheaper cuts of meat. And comparatively speaking, that's going to be your pork right there. And in the meantime, if this isn't a big economic slowdown globally and commodities as a whole continue to rise, well, hogs should be part of that as well. So they kind of feel like this is sort of a win-win scenario for the hogs, and there's more upside potential. And you see that coming in with a whole lot of speculative buying coming in. Commitment of Traders really showed that for last week. And again, that chart looks good, so there's going to be buying on top of that for that reason as well.
All right, thanks for your analysis, Ted Seifert, Xander Ag Hedge here on agweb.com.